Hello guys, how are you doing? It's your boy here, Vincent Chosen, and welcome to this YouTube channel. If it's your first time to turn on, make sure you like, comment, and also you share. And guys, from what I've been getting in my DM, I've officially decided to start giving forex related contents through my audience, because they have been really been asking for it, and I'm going to take my time and also my energy to make you understand and learn what the forex trading. And guys, to simply start, when we speak about forex, we speak about the global market for exchange of national currencies. Yeah, and in order for you maybe to convert one currency to another, you have now to undergo this process called forex trading, of which you now convert maybe US dollar now to Japanese yen. And guys, in order for you maybe to understand, I'll use my space here so that I make you understand. So guys, welcome, and stick around as we dive into it. Yeah. So guys, if you can check, I'll use this wall here. This will serve as our board today. So I'll just highlight it is just an introduction to forex trading. Yeah, I know maybe you might be out there and you are wondering what maybe part-time career or maybe self-employment job you can create. People right now, they are crying about the issue to do with unemployment. Yeah, maybe you might be doing something online and maybe you come across a term by the name forex trading. When I now speak about forex, it's just simply buying and selling of currencies. Yeah, so forex is just, in a simple term, it's just buying and selling of currencies. Yeah, it's an online space where you can buy, sell. Yeah, and from now, maybe understanding this in the simplest term, what's forex, we now dive to types of traders in the forex market. So in forex market, we have different types of forex traders, and yeah, you need, as you are starting off, to understand what type of a trader will you be taking part in the market as. And traders, so we have several of them. We have swing traders, we have intraday traders, we also have a sort of scalpers, We also have hedge funds. We have several of them, guys. The list is endless, and maybe to briefly maybe tell you what maybe these terms mean. When we speak about swing, these are traders who maybe will wait maybe for some weeks in order for him to find a good entry into the market. So these are not people who just trade daily. So they have a special characteristics. They are just, it's someone who maybe can trade once per month because of time limit, or maybe is doing something else. We also have intraday traders. Intraday traders, those are people who trade, maybe they take 1 or 2 trades maybe per day, and that will be maybe okay with them. We also have scalpers. These are people who maybe specialize in raising small accounts. And when I say about scalper, these are people maybe who can enter the market and execute it maybe within 5 or 2 minutes. Yeah, they are just people who maybe focus on very short-term trends in the market, which happens maybe during the day, and they maybe utilize those entries well. And that's what, guys, I can maybe introduce these course to you. And today, guys, I have maximum of 5 essential factors to consider before you take a trade in the market. I need just to give you 5, and that will be done for today. We meet tomorrow or the other day for the next lesson. So, guys, these are the 5 let me say key factors to consider before taking a trade. Before taking a trade. When, guys, I say before taking a trade, it might be maybe in your demo or live account. I know maybe some of you are beginners. You are still starting up with trading. We have something we refer as a demo account. And when you speak about a demo, whenever you open a new account with MetaTrader 5, maybe MetaTrader 5 or MetaTrader, or maybe MetaTrader 4, the outdated version, you will always be given a free demo account. Leave alone demo accounts given by the broker. We also have after you just download that MetaTrader 5 or 4, you will always get a demo account. And it is from demo where we really understand whether you are well to continue with the trading journey, or you go back to your classes. In demo, the broker gives you that partial money, an account that appears like real money, but a loss in this account will not at any way affect your financial factor. Is not a real hard-earned money. It's just an account given by a broker in order for you to check whether you are really capable of executing the market. And in demo account, this is where we backtest our strategies. We do everything before we now go to a live account and fund that hard-earned money into the market. There is no need for you to enter the market and you lose the entire money there. Take time, go through the demo, learn how to operate the MetaTrader app. Don't just go in and you want just to take trades. Just first learn how the platform works. Then after now there, go now to live account. And live accounts, that's where you fund using your own capital. Live account, you fund from your own funds. Maybe funds you got from your family, maybe your salary, maybe it's someone paid you for an item he or she acquired from you. You can fund that money. And make sure you are risking whatever the percentage you are risking. It's an percentage that you can stand out in case you lose that capital trading. Remember, trading forex can sometimes be very technical. 1 minute you are laughing, another minute you are crying. You have lost your account. And further, I'll also be uploading videos to do on how to manage your capital in the market. We have a lot of ways. We have use of stop loss, use of good reward ratio, risk reward ratio, guys. Yeah, risk reward ratio. Make sure whatever you are risking will in turn have a great increase maybe in your account balance. Yeah, make sure whatever you are risking, you can manage that risk. Don't just go with a very small account using a very large lot size, execute trades. Be careful, learn and earn. Learn and earn, guys. Learn and earn. Take time to learn and you will always earn something. So guys, the first key factor to consider, guys, is to identify the market structure. Identify the market structure, guys. And this is very important. And if you are going to identify the market structure correctly, that's a profit guaranteed. You are going to get profit. If you are going maybe to identify the kind of the market structure happening, maybe you specialize in trading gold. Maybe you just trade gold. Make sure whenever you just enter into that account of viewers, you can identify, is a market structure an uptrend or is the market structure a downtrend? hope you clearly understand these two terms, uptrend and downtrend. When we say the market is an uptrend, we tend to look for buy entries. While when the market is a downtrend, market structure is a downtrend, we look to sell. So you will be not don't find yourself in a situation whereby a trend is a downtrend, but you are within that market structure. You are trying to convince yourself that you are going to sell, you are going to buy. Sorry, don't convince yourself you are going to buy, because you are going to make loss. You are going to make loss. In order for you to make good money out of the market, always follow the market structure. If it's an uptrend, unless maybe there are signs of reversal within that trend, make sure you adhere to that. If you are trading maybe a pair like gold, a pair like Nasdaq, and you are seeing the overall trend is an uptrend, look for buy entries. Don't convince yourself that you are going to sell, because you carry a very small percentage to what the market replicates in the chart. So make sure you follow the market structure. And guys, the second thing that is very important, find the key levels in the market. So make sure you find the key levels. Remember guys, the market doesn't just move in one direction. We have at times when the market creates high lows and lows. We also have a time when the market is raging. We have another time when the market is like a no-moving market. It's just consolidating within one or a particular level. You need to understand, before I take this trade, does what kind of the market level that the market is producing at that particular zone. You need to understand whether it's the market level is maybe consolidation. We have high loss and lower loss. We also have maybe a market structure that's consolidating. We can also refer it to intermediate. Yeah, intermediate. And we also have the target level. Within the market, you should be maybe try to analyze where the demand and supply zones are located within that trend. You need to understand where do I maybe try to check the market will move up to. You need to have a clear understanding of that. And we also have that, guys, we are still going. You have to understand now to identify the range, identify the range of the market. We have several range in the market. we can have a push. We have a push. We also have a pump. Yeah, we also have exhaustions. I'm coming back to highlight what all these means. And we also have consolidation. And when we are now maybe speaking about the range of the market, we have areas where maybe we expect when the market reach that zone, maybe it will have a push. A push is maybe, when we speak a push, it's like an uptrend. We have those range in the market. We also have a range where we have exhaustion, like the market have now to shift. Maybe we were in an uptrend. The market have to shift maybe to a downtrend. We must have somewhere where the market will always we must have a point of exhaustion. These are ranges of exhaustion. You should be prepared and understand what these exhaustion zones, the kind of the impact those exhaustion points have to the market. You need to clearly understand, what should I expect now that the market have reached this particular zone? Are we still going to continue with maybe that's an uptrend, or are we going now to shift to another trend? And guys, on this I'll be going to show you how you can establish exhaustions in the market. So later, guys, I'll also prepare a presentation for you on how you can identify the exhaustions in the market and how you can make money out of them. These are very nice entries when they are well utilized. And consolidation is whatever we have explained here. So, and the fourth guys, the fourth is find your pattern. Sorry guys. So guys, you need to clearly understand, guys, what we mean when we speak about finding your pattern. Maybe guys, later I'll also tell you guys, go and learn basics of candlesticks patterns. In the market, guys, we have thousands of patterns that whenever maybe you check a market, you can identify maybe these are maybe an head and shoulder. So whenever you see maybe a market maybe raging, creating an area like these guys, I think soon I'm going maybe to get a screen so that maybe I be doing this over there. So maybe you can identify this like an head. This is an head. Maybe this left shoulders, and maybe somewhere around here you identify maybe now this right shoulder. And this a pattern, and whenever maybe you see an head and shoulder pattern within a trend, you are chilling for sell entries. Maybe the moment the market will break below this, you can now enter sell entries. So this what we use as entry. Your take profit should be the next zone, next demand zone. Maybe demand zone was here last time. You need to put your take profit around that, the first demand zone from your where you entered. That should be where you should aim at taking your profits. Remember, we have a lot of patterns. We also have inverted end and shoulder, which is the vice versa of this. Whenever it appears now, that's an indication for buy. And guys, don't over rush. The moment you rush the market, it will always take money out of you. The moment you start maybe think you are so wise, you can be wise than the market makers. The market will always take money out of your pocket or out of your account. For example, you were trading. Let me try with the quickest way I can manage. Go to my chart, identify a pattern, and try to show you whatever I'm telling you, why you should not fall in this kind of trap. Because the moment maybe you are going to see maybe this looks like an head and shoulder, and you just want to enter. Remember, we have some retests here. You can enter too early before your pattern form, and you are going to lose money. So make sure, guys, you wait for your pattern to fully form. If you are trading gold and you have identified maybe an inverted ended shoulder, wait for the first shoulder to form, wait for the head to form, and wait for a complete formation of the second shoulders in order for you to enter. I'm just telling you this. We have a trader who will enter somewhere around here, this zone. Let me use a blue one. We have a trader who will enter this market from here, and we have someone who will wait until the second shoulder is formed. And guys, we have a challenge with this trader because in order for our pattern to form, we must have a second shoulder. And maybe you have seen the first, maybe you have identified an head, but you are not ready to wait for your right time to enter. Remember, the market can maybe start moving downwards, then on maybe a zone like here, the market starts reversing, then it will eventually come down, maybe make some little consolidation, then it finally moves down to your take profit. We have someone who entered a sell here. The market reversed. He experienced maybe a lot of discomfort during this period because he is maybe going to lose his account soon, because market reversed a deal to reach this point, then in this gap. Remember guys, in forex trading we have something we call price action. And price action, guys, whenever you by any chance, if guys you will ever understand what price action is in the market, you will never make premature decisions when trading, because you will know the market must maybe behave this way when this particular pattern is being formed. I must wait maybe for this particular whatever to do. Yeah, there is no way the market will always be directly to what you are predicting. Maybe there will be some retracement, some retest. Yeah, and that's the best thing. To the other case of this kind of trader who entered here, the market maybe he entered here, the market made some retest, of which if he headed somewhere here, this the TP, this is now the stop loss here. So that's, this trader will not, his trades will not hit the stop loss, because he can manage these retests, he can manage these small retests. So these are better trader compared to these. You should always wait for your pattern to form fully. Don't make premature judgments to the market. Remember, as I was starting, I told you, you carry a very small percentage of the market. Yeah, we have hedge funds trading, we have big companies here trading, we have sort of JP Morgan, the largest bank in the US, such of those trades. So in case you maybe be thinking, just stick to your pattern. Yeah, so guys, and the fifth and the last topic, and the last bit, it's now combine everything. So guys, the last bit is combine everything. These four core elements, combine them together, see what now the market will present, and take that trade. And I assure you guys, if you are going to follow these 5 key factors to consider before taking a trade, you will always make money out of the market. Guys, have a nice time. Let's meet in the next episode. Bye bye. Have a nice time. Thank you.